Hey everyone, welcome to this episode of the Ncast from Ncontracts. I'm Guy Weissmanel, your host, back with y'all for another great episode this week. So this week we're going to take a dive into the world of fair lending. It's a huge part of the book of business for a bank or a credit union or mortgage lender, and it's an area that's oftentimes not well understood, especially how you navigate it in today's world. It's got a lot of potential to get you in trouble with regulators if you're not managing it correctly, but it's a great way to make sure that your bank and your book of business is balanced and that you're participating in the community in a way that gives you a competitive advantage over other institutions in your marketplace as well. So in today's podcast, our own Kimberly Boatwright from Ncontracts is going to talk working remotely in the COVID environment and its impact on fair lending, as well as helping us navigate the complex world of HMDA and PPP loans and lending compliance. And she's going to do that with Elizabeth Ortloff. Elizabeth's with Midwest One Bank, and they're based out of the awesome college town of Iowa City, Iowa. If you haven't been, you need to go sometime. It's a ton of fun. And trust me, you're going to be smarter on this issue after you listen to these two experts talk about it. So Kimberly and Elizabeth, over to you guys.
Hi, Elizabeth. I am so glad to be talking with you today on my first ever Ncast, especially since we're focusing on one of both of our favorite compliance topics, fair lending. Will you do me the honor and kind of give us a little bit of background so everyone who's listening can learn who you are and why you get to join me this morning?
Absolutely. And Kimberly, thank you for having me. I am part of Midwest One Bank, a $5.2 billion organization chartered out of Iowa City. And we are in 5 different states, Minnesota, Iowa, Wisconsin, Florida, and Colorado. And so as you can imagine, that lends to many fair lending challenges. So I'm eager to talk about that today.
Especially when you think of the map in the United States and you jump to Florida from those Midwestern areas, right?
Exactly.
So when we're thinking about where you're located in the Midwest and then again on the East Coast, what changes, if any, did your bank have to make with how and where you guys were doing business during this COVID environment and how you were doing it?
You know, really in the early days of the pandemic, certainly our branches were closed. We went to more traffic through our drive-throughs by appointment only, like many of the organizations and banks throughout the country. And we conducted most of our customer contacts by appointment. And we also really enhanced our online banking presence, our mobile banking, our mobile deposit, those kinds of electronic ways of doing business. And we already had a good foundation there. So that really helped really catapult us into a really good position to be able to serve our customers. So
when you think about the deposit area or the deposit way of helping your customers, that's kind of different though if we spin it and think about our lending environment, right? So how did you guys have to adjust, do you think, to doing lending in an online environment? And how do you think it's affected your fair lending program?
Well, we were already accepting online applications, and we were also already doing DocuSign for retail lending and mortgage lending. And so from that point of view, we already had the same foundation. And so, yeah, I did talk a little bit about the deposit side a little bit, but we were already there as far as lending as well. And we added some additional ways to also do DocuSign for some non-common situations. And we kept continuing to look at the ways to do that in a better way.
So when we think about the whole idea of fair lending and being able to service everyone within and around our branches or within our communities, do you know what kind of effect banking or lending in the COVID or pandemic environment had on maybe those areas that didn't have access to credit or to application online? Do you know what effect it's had?
No, and I think that's one of our key areas that we are really looking into. Because the pandemic is still continuing, that is something that we know it was really hardest hit in some of the areas where jobs in low and moderate income areas were highly hit, and minorities in health and job loss was hit in a much deeper way than in other areas. And so we are closely looking at that, and we will, as this continues, be looking through our data as best we can to try and serve those areas. And I think getting people back to work, understanding unemployment and understanding how even the poverty levels changing and all of those different things and demographics will hopefully lend to bringing a different picture and helping us understand it better.
So since you brought up data, we all know that we have great burdens placed on our fair lending programs, right? With data collection and how we're reviewing it. So how difficult do you think it would be to manage your program if you didn't have software to help you analyze data? Or do you have software?
Yes, we do. And it would be literally impossible to manage it without that. Given the different states that we are in, the large amount of HMDA LAR items that we have, I don't think that it would be possible from a resource standpoint that we could even do that. And I don't think it would be efficient. We wouldn't get the accuracy that we do. It just wouldn't be possible. We wouldn't be able to rely on it. We wouldn't be able to be as agile in being able to change up the different parameters that we need to, looking at specific and drilling down. And so all of that is very, very important to us to be able to get data to the business lines and to understand our program and to the board and to senior management as quickly as possible. You know, I mean, some of this lags a lot because we don't get peer data as quickly as we'd like.
Yeah.
And so some of it lags, but we can get it as quickly as possible when we have software that supports that for us.
So in thinking about your peer data, and you said not getting it as quickly as you would like, when you do see that, does it help your institution kind of, you said move quickly. So when you see what your peers are doing compared to what you guys do, how do you adjust your lending focus or anything when you see what the peers are doing?
You know, I think it just gives us a measure of, you know, are the opportunities there? I mean, it just helps us to understand, okay, are we on par? You know, if we feel like we have a strong program, are we doing the things that we need to do? Or are there other things that other banks in our peer group are doing that we're missing? And they're getting opportunities that we aren't. And helping us to understand if there are just pockets of areas that just need some help, or if it's a broader across the board something that needs help. So.
Okay, so I know with peers and data, we always talk HMDA. I think this year kind of is threw a new wrench for us. We knew 1071 was going to come out. Then we get the PPP loans. So how are you guys, what are you doing? Do you have the same level of diligence on non-HMDA reportable loans, whether it's small business or, I don't know, car loans, consumer loans? How do you guys do that?
Well, you know, we have looked very closely at our PPP loans. That is something that we took a look at right away, similar to how we look at our HMDA loans, as best from more of a where they are geographically, not necessarily who they are as in 1071. But as far as all the other non-HMDA loans, through acquisition, we acquired a credit card portfolio, and that's one of the things we have not measured our entire non-HMDA data, but that is something that we are working on, and it's really one of our priorities for this. Either we'll get it done at the end of this year, or it'll be first quarter next year that it will be something that we will have completed, because it's really something that we need to. With our last acquisition, it's something really important.
So what would you tell others in your similar scenario when they're trying to manage their fair lending programs and you haven't, like you said, you acquired this portfolio, so it's making you rethink your program? What would be one of the things that you'd offer to somebody else in the same situation?
I think just really understanding the market that you're going into, understanding what possibly concerns that were there ahead of time that maybe they dealt with that previous bank dealt with, and understanding the products that are coming into that you are acquiring, and do you understand the risks that are associated with them. And maybe you don't have that expertise in-house, and maybe you have to go out and gain some understanding of those products. I think that, and then really understanding the demographics and the economic impacts of those new assessment areas, that is probably the biggest thing. Where are the opportunities? Understanding what the REMA is, where we consider where we're reasonably expected to market, what they were doing, is that going to continue? How do we integrate marketing into that? So I mean, I could keep going.
I know, that's a good segue into a question that just popped into my head. So when we think about our fair lending programs, do you think yours helps to control that redlining risk? Because you just brought up the REMA, you brought up marketing, and compliance and marketing. We kind of love to pick at each other, right? So how do you think you guys are reacting to help control potential redlining risk?
Well, I mean, we're doing a lot of things, and I really believe that it is a layered approach. I mean, it starts first with strong support from your board and senior management, that they really believe that, it's important. And then from there, it's your policies and procedures, your staff training, compliance audit, as well as your monitoring, your marketing, and really helping marketing to understand, if they don't already, where the hot spots are as from fair lending, understanding things like image in marketing and advertising, as well as reporting. And so we do semi-annual reporting to our board and management. We also have a CRA Fair Lending Advisory Committee that assists our CRA Fair Banking Officer in moving our program forward and keeping some of that accountability. And it's that particular committee is executives. And so the accountability is very strong in that committee. And we continue to see really good things come out of that. So I believe it's a layered approach.
Layered approach. So when you're talking about committees, we have a lot of institutions that we work with here in Ncontracts who haven't evolved to the level of having that fair lending committee. So I'm assuming, and tell me I'm wrong here, that is probably, I think, one of the foundational elements of your program, having that committee. And how do they interact with the whole institution?
It's fairly new. I mean, it is just a year old. Actually, we're just reviewing our charter now again, because it's just been a year, and we just found that there was a need for that advisory and oversight that was closer to the management of the CRA and fair lending programs. And because CRA and fair lending are so closely knit, it just made sense. And so they really review everything before it goes to the board. They have their stamp on that. They make their comments and help with accountability. We have an accountability statement. There are plans and action plans that have dates that things need to be done by, and so there's some escalation that's built in. So it's been really great. It's been a great part of the program.
So is that committee or your team intimately involved with product development or looking at those areas? Because it seems like our fair lending programs sometimes have challenges when it comes to product, right? So is that committee involved in that, or is that something that you do?
So right now, it's something that is on my plate. I'm part of the product and pricing team. And so if there is something that is related to fair lending, I will bring in our CRA and fair banking officer. And she's very intimately involved in that from that aspect.
Okay.
It probably is something that we could enhance.
I would think a lot of our peers think that too. It seems like we're all like, can we please see this stuff before it's launched, right?
Right.
It's always sometimes that afterthought for us for the poor compliance people to be, oh, well, guess what we just did last week? And we're like, wait, time out. We didn't review that first.
And even the monitoring after the fact, after it's been in place, I think that that's something that's really important too, to make sure that, you know, it's functioning as you intended, that there hasn't been any process or procedure change, even if you did see it up front, that you understand that it is still functioning as you thought.
Okay. So thinking about data and looking at things after they've happened to understand how things grow and evolve in our programs, how are you guys using complaints and fee waivers in your program to kind of as one of those data analysis points, or do you?
Well, we do. Complaints particularly, that's one thing that is reviewed for each of the semi-annual reports. There is a section in the report that specifically is reviewed and highlights a complaint that is related to fair lending in any way, or products, or anything of that nature. As far as fee waivers, that would be considered more of an exception. And exception processing or exception monitoring is something that we are continuing to enhance. And I think that it's something that is a really high priority for our organization. We don't have it right all the time, but we're getting there. And so we're kind of taking it in pieces by business line, and making sure that, you know, so, you know, with retail, mortgage, and commercial, and getting each of those set so that we understand where all these exceptions are coming from, and that it gets escalated to the right individuals, and everybody sees it, and there's transparency in that process. So
it does seem kind of like, I don't know what your thoughts are, but kind of the whole the fee waiver thing is kind of seems like it's been more prominent with some of the regulators the last year or so. Have you guys?
Well, our last exam was in 2018, and we didn't hear anything about it at that time. We're regulated by the FDIC. We didn't hear about it at that time, but I do think that, you know, certainly things, you know, change over time. We're expecting an exam at the end of sometime next year, October timeframe, probably a year from now. So.
So given all of the analysis that you're doing as part of your programs, daily, weekly, monthly, quarterly, what do you use the information that you're learning from all of these different areas to strengthen how you're doing training at your bank?
Yeah, absolutely. It is one of the keys. It matters dramatically to what we're doing, from training to the board, being able to use specific examples of things that we've learned throughout the program in our training is crucial to really drilling in the why behind what we're doing. And then when we're also speaking to, whether that's marketing, mortgage, retail, whichever business line, or just general training to the broader employee group, it really helps them to be able to relate it to what they're doing every day. And so that is really a key. And it also helps us to enhance our own program.
So it kind of sounds like you guys have evolved to that level to where you're not just doing the check the box fair lending course and saying, hey, we did it. It sounds like you guys really are evolving and moving ahead to kind of make sure if I am a loan officer versus an underwriter versus a processor, I know my role in the process.
Right. And I think, you know, we certainly have our e-learning courses that everyone gets. That's part of it. But we do take time to spend with each of the business lines to do face-to-face or now web meetings to do training. And so that's been really successful, and I think it's much more effective.
I'm gonna switch gears on you for a second, recognizing I think everybody for the last week has been talking about our election, right? So what are your thoughts about how that change in administration is going to affect our fair lending programs in the coming months and years?
Well, you know, first of all, I feel like it's kind of a wait and see. I know that there's going to be impact, of course. I hope that it's not as dramatic as my gut might tell me it may be. But, so there comes with some uncertainty, of course, it's like, what's next? All I know is that we are prepared for whatever's ahead, and that we're really ready for the challenge. I don't want to go back to, being basically, I guess, regulated by enforcement action. And so I hope that we don't go there. I hope it's somewhere different than that. But, so I'm cautiously optimistic, maybe is a way to say that.
And you're like, thanks for asking me that question, Kimberly.
Right.
I knew it was going to happen. I really appreciate your time that you took out of your busy day to help to be on my first episode of the Ncast. We're kind of running out of time, so I'm so sorry. I think we could talk about this conversation for another hour if we wanted to. But I want to thank you for your time, and I want to thank all of our listeners. And I really hope that everyone enjoyed our little fair lending conversation this morning. So
well,
thank you so very much.
Yeah, thank you so much, Kimberly. I appreciate it. I enjoyed my time.
Okay, everybody, that wraps up another great episode of the Ncast. If you like what you heard, we'd love it if you would leave us a review and let us know about it. And if you're not yet subscribed, you can do so on your favorite podcasting platform today. Thanks again for listening, and we'll look forward to talking to you next week.